This is the Nomad Futurist podcast, a podcast about the evolution of technology, society, and transformation. Connect with us, share your thoughts with us at nomadfuturist.com. Let's get this started. Here are Phil and Nabil. Hello. Welcome to Nomad Futurist podcast. This is your host, Nabil Mahmood from Kona, Hawaii.
This is your co-host, Philip Koblenz from Montclair, New Jersey. Snowy Montclair, New Jersey.
And I'm Peter Hopper. I'm joining from New Jersey as well, from snowy Ridgewood, New Jersey, with two feet of fresh snow on the ground.
Oh my God.
Wow. Well, Peter, thank you very much for taking the time to join us today. Let's start with a brief introduction of who you are.
So again, Peter Hopper. I'm currently a partner at a private equity firm in Boston, Abry Partners. Prior to being at Abry, I was one of the co-founders of a boutique investment bank in New York called DH Capital, which over the years became premier advisor to the data center sector. Prior to that, I was the CEO of a private equity-backed company in the ISP space called Communications. And prior to that, I worked for a family-held cable television company, which was really my first introduction to telecommunications. And that was sort of my first real job out of college after a brief stint trading foreign exchange on Wall Street for a couple of years.
There are so many reasons why I love you. I'm not going to go into them on this thing because it'll just embarrass you and probably embarrass me more. We haven't had traditionally finance people on our podcast. The evil money, the evil Monty Burns of our world, and there are plenty of them. You, unfortunately for them, fortunately for all of us, are not one of those evil ones. So our goal
will the fire that I breathe burn you guys through the
probably. It might. It depends. It depends. Depends if you have 5G. So, one of the things I've always loved about hearing you speak and the way you approach things, and one of our goals is the demystification of our world. And, you have this kind of plain spoken approach with understanding the fundamentals and explaining our industry, the industry of, mission critical infrastructure and data center and cloud and how they integrate with each other in a way that is unique and kind of matter of fact. And I've loved it. And it's why I've, among the many reasons why I've come to admire you over the years.
Thank you, Phil. I am blushing now. Yeah.
Yeah, I see that. And with a haircut, it's a full-headed blush. It's not. You can't hide it anywhere. My God.
Can't hide it.
Right. So I guess the question is, how has that experience from finding out getting involved with telecommunications from the world of coax and cable TV, kind of informed your ability to not be caught up in some of the hoopla and confusion that sometimes surrounds our world?
Well, the reason I sort of mentioned the earlier part of my background is I really have felt as I moved from different finance related jobs in the sector, I consider my brief stints on the operating side to be a huge advantage, quite frankly, coming to finance from a little bit of operating side, because I think, if you spend some time actually in a business involved in running a company, you sort of understand why that light blinks green and that light blinks red. And it gives you an appreciation for the fact that running a business and building a company is way more than, an Excel spreadsheet exercise. And I do think that sometimes people that just come through a traditional finance background, college to a internship at a big bank, a training program for a couple of years, and then into, whether it's private equity or hedge funds or whatever, I think without that hands-on operating experience, I think some of this stuff can be a little too much of just an Excel exercise, and they don't appreciate the actual blocking and tackling, that goes into running a company every day. And I think that experience that I had being on the operating side in several different roles gave me that foundation in sort of what drives the business, what is the value proposition that the customers are looking for, how does the infrastructure kind of marry up to deliver different services? And, it also obviously exposed me to the telecommunications space, which is such an interesting, dynamic part of our economy, only made more so, by the way, by the pandemic, as we've seen. I mean, we've seen 2 or 3 years of cloud adoption happen, or, maybe 7 years of cloud adoption happen in 1 year, just as we've all moved to learning online, doing our business online, watching all of the video that we consume, online through streaming services. I mean, not to mention just the shopping, having everything delivered to our house now versus going out to stores to get it. all of that stuff. Now it relies on the plumbing of the digital infrastructure that's been built. And I have a favorite saying that I stole from somebody. It was one of the founders of a company called Net Access in New Jersey, Alex Rubinstein. And Alex coined the phrase, which I've used over and over again, so I want to give him credit. If you think the cloud is going to grow, which we probably all do, then obviously we need more sky to put it in. And the data center is the sky. So, it was sort of an interesting quip that he dropped in a meeting one day. And I'm like, oh my God, that's brilliant. That is the whole thing in a nutshell. If the cloud is going to grow and we're going to consume more content, digitally, and we're going to, do school online and all this other stuff, which we've now discovered is so convenient and so powerful, we need more data centers, we need more servers, we need more fiber. And, it creates this very dynamic industry where there's so much opportunity for career path and whatnot. I'm so happy that I got exposed to it early on and I've stayed in it because it's really it's a fun space. And there are a lot of great entrepreneurs like yourself, Phil, who've operated in the space. And, you just meet these super interesting people succeeding and building great careers and building great companies. And it's really uplifting. I found that it just really reaffirmed my belief in like the country. Like it's just, there's so much opportunity, and watching all these entrepreneurs deploy capital, create jobs, create wealth for themselves, their shareholders, their employees. It's really been a really just uplifting experience.
Looking back, you went to college and got a degree in finance.
Yes.
When was the turning point that you decided that you've got to look in telecommunication, connectivity, internet, the cloud, and so on and so forth? What was the driving factor behind that?
Well, I'd love to say I had some big grand plan or this epiphany one day, but it's really a lot simpler than that. My father-in-law, who was very much my mentor in business, was an early cable television entrepreneur. And there came a point several years after I got out of college where he had built up a very successful cable television company, but he was looking to expand. And in order to expand, he was bringing in some outside equity capital, and he needed some additional executive help. Just, hey, we're going to buy some systems, come work for me. It's going to be really exciting. And, he was my mentor, and it was a great opportunity. And I sort of leapt at the opportunity to jump from, trading foreign exchange at that point, which I did like. It was fun, but I sort of said, I'll be dead in 5 years if I keep doing this. It was, super stressful, a lot of drinking every night. It was almost like being on a sports team. It was a lot of fun, but I could tell that it wasn't how I wanted to spend the next 20 years of my life because I wouldn't live that long. So I left to join him at his cable television business and did a variety of different operating roles. And that's what sort of brought me into telecom. Nabil, I'd like to make sort of one point to your listeners that I think is really important from my experience, which is one thing for me, my career has not been a straight line at all. One thing has always led to another. So quite frankly, some of the things that didn't work out very well were the most valuable experiences I had. And they sort of taught me important lessons that I then applied going forward in new things and allowed me to be really successful. And if I could digress for 1 second, if that's okay, I'll give you a prime example of that. So after working for my father-in-law for several years, we very successfully grew the company. And I don't know if you guys remember when Paul Allen decided that he wanted to be in the cable television business, and he had his Wired World concept, and it was sort of early days of cable modems, but he could see, as many could see, that that was going to be the broadband pipe to the house. And he ran around and acquired a bunch of cable companies, and my father-in-law's company was the last big one that he acquired. So prior to selling, though, we had begun acquiring all the dial-up ISPs that served the areas where we had cable properties. And we felt like, boy, this makes sense. We're going to roll cable modems out at some point. We already probably have a billing relationship with most of these people because they're taking cable television from us. So it's sort of a natural to get into the internet access business. And then as we roll out cable modems, we can convert them from the dial-up connection to the broadband connection. And we've already got a billing relationship with them. So there are a lot of synergies to doing this. And so we did a series of acquisitions where we acquired dial-up ISPs, right? We all remember getting on the internet that way. The modems talking to each other and the slow connection. Well, in any event, there was a private equity firm in Boston, Great Hill Partners, which may be a name that's familiar to people. They've been investors in the sector several different times. They had very successfully taken a company public in the dial-up space called Voyager.net, if you remember that name. And they wanted to do another dial-up ISP roll-up. So they saw that the cable company was being sold, and they knew that we had been acquiring ISPs. And they reached out to me. John Hayes, one of the founders of Great Hill, reached out to me and said, "Hey, what are you doing next? You know, are you gonna do something after the cable company gets sold?" And I'm like, "Yeah, I need to keep working, and I really want to keep working." And he said, "All right, why don't you come up to Boston? And I've got an idea I want to run by you." So he ran the idea by me of running a roll-up of dial-up ISPs in the southeastern United States, and they wanted to back it with their capital, and they were looking for a team to execute the plan. So I, shortly before the cable company got sold, I left to form a company called Duro Communications. And Duro Communications immediately embarked on a very aggressive acquisition strategy in the Southeast, buying up ISPs in places like Orlando and Melbourne, Florida, coastal North Carolina. And, you know, for a while, it looked like it was going to be a great success. We were buying things left and right. Quite frankly, you know, initially integrating them fairly well, but very quickly we, you know, sort of bit off more than we could chew, you know, in all honesty. And, you know, the integration wasn't really happening as well. And not only that, but we were buying companies that were doing 1995 dial-up internet. And very quickly, Net Zero came along and said, "Oh, you know, what you're doing for 1995, we'll do for free." And so customers began leaving us to go to cheaper alternatives, and we weren't signing as many new customers up to replace them. And we had borrowed, you know, a bunch of money from banks to help finance some of the acquisitions. And where I'm going here is it ended very badly, unfortunately. But, you know, from that experience, one of the ISPs we acquired was in Orlando, Florida, and it was founded by a guy named Rich Lee. And Rich and I became very good friends. Phil's laughing because he knows where I'm going here. So in any event, when I left Duro at the end of 2000 and sort of left a burning, you know, hot mess in John's lap, you know, God bless him because he still talks to me. It was clear that it was not going to work out very well, and borrowed more money than we could pay back. And we were filed to come public, but the NASDAQ had cracked for good, so we weren't going to get public. And you know, I had to downsize the company substantially, which was incredibly painful. Went through a series of rifts. So I had to learn, you know, that whole, you know, experience, which was new to me of, you know, all right, now you got to cut costs, not, you know, lay people off and, you know, sort of play defense, not offense. And, you know, I learned a lot of very important lessons from that experience. And it really gave me the respect for how important it is to operate a business well. Yeah, the finance stuff is sexy and buying companies is all sexy, but if you can't operate it right, you'll get yourself in a lot of trouble quickly. So I mentioned the Rich Lee story, though, because out of these setbacks often comes great opportunity. So I mentioned Rich Lee. We had acquired his ISP, and he and I became very close friends. And when I left Duro, a good friend of mine, a guy by the name of Joe Duggan, who'd been a very successful cable television investment banker, reached out to me and said, "Hey, what are you doing now? You know, what are you going to do now?" And I said, "You know what, Joe, I just want to catch my breath for a little bit. But, you know, let's get together and talk." And we got together and we talked about maybe buying some companies. But, you know, that was during like the dot-com meltdown. And pretty quickly we figured out that, look, there's a huge opportunity to start an advisory business that focuses on internet infrastructure, cable television. You know, all these sort of themes are coming together, creating a lot of demand for broadband. And all this money's been invested all over the place, and it's all got to get figured out somehow. And we've got, you know, the right Rolodex, we've got financial capabilities, and Pete, you know how the pieces fit together. There's a real good opportunity here to build an advisory firm, which is how DH Capital started. One of the very first things we did at DH is there was a company in North Carolina that had entered bankruptcy that had a small data center asset and some managed services. And it came to our attention, and I called up Rich Lee and said, "Rich, there's something in North Carolina that you need to go look at," because he was a great operator. And I knew that he could figure this out. So he went up to North Carolina, looked at these assets in bankruptcy that we had identified and said, "I want to buy this. Can you help me buy it?" So we're like, "Yeah, sure." So we put a little money together, invested it behind Rich. Rich had some money that he put in. And that company that we bought for a couple $1 million became Hosted Solutions, which, you know, in 6 or 7 years was sold for $140 million to a private equity firm, Abry, that I now work for. And then several years later, it continued to grow. Rich continued to run it, and it was sold for $310 million to Windstream. So, you know, again, out of a huge setback at Duro, I met Rich, and that led to, in some respects, founding DH Capital and doing one of our best deals we ever did, both from an investing standpoint and an advisory standpoint. So it just goes to show, like, one thing leads to another.
Work out for Windstream. I'm just kidding.
It worked out okay. They ended up selling it to TierPoint, and they had grown it, and it was a very important deal for them at the time because they weren't in the data center or managed services business at all, and their customers were dying for it. But ultimately, it was deemed to be non-core, their core business of fiber and telephone service. So they ended up divesting it. But it worked out great for Rich, obviously, great for us, really well for Abry. And then just to come full circle. So now I'm sort of building and running DH Capital, and John Hayes from Great Hill had made an investment in a company called Lattices, which, Phil, you probably remember, very successful data center managed services company. And it came time to sell Lattices. And by then DH had really established itself as the best firm doing this, getting the best valuations for their clients. And Great Hill selected DH to sell Lattices. And we advised them on a very successful sale to Zayo. And John and I, got to work very closely together again. Very successful outcome. So that was wonderful, coming off the setback that Duro had been. And then that success with Lattices led to our involvement with Great Hill on Ascenti in South America, which became by far the dominant data center provider in Latin America, primarily Brazil, which DH put several rounds of financing together for and participated in a couple of them. I actually served on the board with John and the CEO. And then when it came time to exit that business, Great Hill hired us to do that. And we had a very successful sale to Digital Realty. So again, things come full circle. That's one of the wonderful things about this industry is it's very deep and rich in terms of relationships and interconnections. Lots of people know each other, and there's sort of a whole ecosystem that, you kind of run into the same people over and over again. And, it sort of really rewards people who, kind of do the right thing and, treat people the right way and, are honorable, have good integrity. You tend to run into people over and over again. And if you've had good experiences, you do business together again and again and again. And it's really wonderful in that regard.
Absolutely. So a couple of questions that come to mind. First of all, just curious, based on your experience of the last couple of decades being in the financial part of the business, how much total transaction value have you conducted?
I know I have these numbers, but I think at DH, just keeping it to DH, I think we did, 30, 35 billion worth of transactions over the years, if you add them all up. Many of those were advisory assignments where we were selling, we sold companies like Ascenti, Telex, Infomart. So, some big deals that were multi-billion-dollar transactions, and then a lot of, $400, $500 million type transactions as well. And DH continues to be very successful. They really haven't missed a beat at all. I left about 9 months ago to go to Abry, but they've continued to be very successful. No surprise, great group of people there, very talented. So it's nice to see them continue to be so successful.
So now, being a finance guy and the fact that the technology is evolving every day, there's something new literally by the minute. Mm-hmm. How do you keep up? It's a great story. Finance guy getting a telecommunication or cable business, to understanding ISPs, to understanding SaaS and data center and whatnot. Mm-hmm. And we are evolving. I mean, with the pandemic that we're in, there's workforce transformation, business transformation, technology at our fingertips. How do you, being a finance guy, keep up with this mass change that's happening on a daily basis?
I'd like to think I fully keep up with it. I don't, but I think one of the things I've always been really interested in, the why, like, how do things actually work? Like, how does that service actually get delivered? What differentiates the way Phil wants to do it versus the way CyrusOne or Digital Realty wants to do it? And I think if you have that curiosity of really understanding how things work, and how the business models of companies in the sector differ from each other, you begin to appreciate the nuances of, oh, wow, there's a hole in the market here. Like this is being done in a very sort of inelegant way. The customers aren't super happy with the service they're getting. It's really hard for the company to provide the service. There's got to be a better way to do this. And then someone comes along with, sort of a way to do it better. And your antenna goes up. You're like, oh, I know that there's a real need for that because I've watched this problem, evolve over several years with companies we've worked with. So this could be a really interesting new business given what they're trying to do. But I think it's sort of a fundamental curiosity of really trying to understand like the why, behind it, not just the numbers, not just they generate this much revenue and, this much margin, but like how do they generate that revenue? What is the service they provide and how do they provide it?
And I think that's the key differentiator. I mean, I think in one of the main complaints of private equity coming in and taking over a lot of these assets is that you just the passion that goes into a company that is being operated by a founder is just something that's really difficult to capture in a bottle. And through like the traditional algorithms that multiple EBITDA, becomes a kind of depersonalization of, what makes these companies the way they are. And I think one of the key differentiators that I've always found with you and the members of your circle that you surrounded yourself by was that understanding that company culture, zeitgeist, that feeling is magic. There's not really a valuation on it. That intangible thing is what made the company successful. And simply by putting assets together that look good on a spreadsheet, you don't necessarily extract the most value. But by
building the right culture, like fostering the right level of teamwork and creating the right value system within the organization. Those are the intangibles that separate the great companies from the good companies. And I think the most successful investors and private equity firms, really get that and appreciate that. And, I would say it's no accident that I'm at Abry, because we always felt that among many private equity firms out there, they really got that. And that was a big part of their success as a private equity firm. But I would, sort of say, there are other firms as well that I think have that to a good degree too. I'd highlight Great Hill. It's sort of like, are you fundamentally at the end of the day, are you in the foxhole with the operators, or are you just in the foxhole with the finance department? And I think the great firms, the Abrys, are ones that really get in the foxhole with the operators and appreciate those intangibles, Phil, and understand those are what differentiate. I mean, they're very sophisticated financially, goes without saying, but they appreciate the nuances of what separates the great companies from the good companies.
And I think one of the things I've always tried to tell our listeners and reiterate is, like Nabil had said earlier, there's so many different areas of our industry that you can get involved in. And we would urge people to get involved in all of them. What we've always preached at my place is the idea that, we don't compartmentalize our employees. We allow them to, dabble in cooling, dabbling in network, dabbling in all of these different areas, because that experience will inform things that you can't particularly see in that moment.
That's right. And I think that's that whole idea of like one thing leads to another. Like if you keep your eyes open, I mean, look, at the end of the day, I think anybody in life, if you focus on things that truly interest you, your chance of being successful at them rises dramatically because you're engaged. It's sort of something that you want to be doing. It's a little bit like gravity. It kind of pulls you forward. But I think part of that is like when you get into, if you got into an organization, Phil, like, one of the companies you've been involved with, like keep your eyes open for activities within that organization that interest you, whether maybe it's construction or it's the electrical side of things, or it's customer service, or it's marketing and sales, and if you keep your eyes open for interesting opportunities, one door leads to another. And I know that's kind of a cliche-ish, but, I can give you example after example of, people who ultimately went on to great success, just kind of kept their eyes open for, oh, that looks like an interesting opportunity and I should spend some time on that. And they do that. And that leads to another opportunity, to another. And pretty soon they look back and they're like, wow, I've made a lot of progress here,
COVID-19 has totally transformed our lives, whereby cloud or the digital transformation or the workforce transformation that was going to take, a decade, as of March of 2020, has taken months.
Yes.
Based on where you sit today in the financial and the investment segment of the business, what are some of the key initiatives that you're seeing, some of the key investments that you're looking at, and some of the cool technologies or upcoming technologies that are getting your attention?
Well, I think probably like the biggest thing on the horizon, which, gets a lot of press and we've all talked about it, is, 5G, that amount of bandwidth, in your handset, the things that will enable you to do on this, Apple iPhone or Samsung device or whatever your smartphone device is really unprecedented. But again, to make that all work, back to the infrastructure, that requires a lot of additional infrastructure to be deployed. Things like a lot more fiber deeper and deeper into the network, to the tower sites. Because think of the amount of data that's now got to flow from the server at the data center, like the video stream, just for example, right? It's got to flow from the server in the data center, over terrestrial, network stuff, fiber, whatever, through some switches, through some routers to the individual tower site that your cell phone is talking to. Then it's going to go up the tower to the 5G radios and then over the airwaves to your device. And think about, 20 people, all with their smartphones pulling down a different video stream, and the amount of data that implies has to get to that tower. So we need a lot more fiber, deeper into our networks. And, again, we need more data centers with more servers to serve up all this content that we're consuming. So, I think 5G, but 5G enables that. If you don't have that bandwidth from the radio to the handset, you can't do a lot of these things. And as we think about, Internet of Things, for driverless cars, the amount of data that needs to go back and forth between, things and the compute and the data storage that, takes all that data and turns it into something useful. There's a lot of infrastructure that needs to get built to support all that. So, we think, from an investing standpoint, I think ABRI has been really good over the years in particular at, sort of identifying like where's the sweet spot of the sector. For a while it was retail, co-location, and interconnection. So, sort of a telex business model. Then it became managed, co-location with managed services, more the hosted solutions model. Then it became like very sophisticated, like private cloud type stuff, a data pipe, a rack space. And, we think sort of moving forward, and then wholesale data center stuff, the hyperscalers, arrived on the scene. And then all of a sudden the real opportunity was building these massive data centers with, 20, 30 megawatts and leasing capacity to Google, Microsoft, Amazon.
Sky.
Right. And, many of those are still great opportunities. Digital Realty and Equinix continue to do, incredibly well with, highly interconnected data center sites that they operate around the world. And certainly there's continues to be tremendous growth, serving the hyperscalers' needs, both domestically and internationally. So those are themes that you can still invest behind for sure. But we think kind of the big next thing is content is going to continue to move further to the edge of the network, closer to the eyeballs consuming it. And there's just lots of reasons for that, but mainly it's a much better experience, right? Microsoft has discovered this with Office 365. If big financial firms are running very, very large, financial models, and it's being, served off a server in Ashburn and being used in New York, if you don't have the right connectivity, that doesn't necessarily work that well. So, however, if you put that workload in 111/8 or 60 Hudson, and it's just a very short connection to the office building where people are consuming it, it works great. So we just think that's just an example of why content needs to move closer and closer to the eyeballs consuming it around the world. And that creates big opportunities to invest in infrastructure at the edge, at the network edge. Is the network edge the base of a cell tower? Maybe ultimately it is, or is it Memphis, Tennessee and Knoxville, Tennessee? So that eyeballs in those places where there are a lot of people are not being served out of Ashburn, Virginia, but maybe are being served out of infrastructure in Knoxville. So we think there's very investable themes around ideas like that.
And I think one of the things that I'm going to take credit for it, I think I coined it, is that because the world is circular, at least in most of our opinions,
as far as we know,
there actually is no edge. The edge is everywhere, right? Because it's all interconnected. Yeah. Not as brilliant as Rubenstein's, of course, but I'll take credit for it.
Phil, to your point, I remember the show we all used to go to, HCTS in Las Vegas, which was a great event, industry event. And DH was very involved in that as a sponsor, and we got a speaking slot because we were a sponsor. And I or one of my partners would give sort of a talk every year on sort of trends in the industry, update on M&A activity, valuations. And we used to joke, it was called, for guys like Phil, it was called the net worth talk. What deals are happening? What are companies worth? What am I worth based on the business that I have? So, we used to get good attendance to it because everybody's always interested in what their net worth is.
And what's nice about it is right after that, we would go to the bar and I'd be able to drown my sorrows because I answered that question for myself.
So that leads into a question. How has COVID impacted the merger and acquisition play in our industry?
I would say the activity level is a little reduced for a couple reasons. I mean, valuations have remained very stable, arguably maybe risen a little bit, but activity levels have probably come down a little bit for a couple reasons. One, I would say is, M&A requires debt financing to be available typically. So, the pandemic sort of created a lot of upheaval in the debt market. So the banks were obviously a little reticent to loan money as freely as the pandemic hit because, natural concerns over a lot of the loans they'd already made to companies. They were worried, are we going to get paid back just given the impact of COVID? And then I think investors, certainly this, would be true of us and many others, we were sort of constantly looking at businesses and saying, okay, is this business, resistant to the impact of the pandemic? Because obviously many businesses were, dramatically impacted. So anything in hospitality, if you were invested in hotels or anything travel related, your business got, vaporized by COVID. But, I think one of the things that people have appreciated after, a year going by is how resilient the business models within, digital infrastructure, really have shown themselves to be during COVID because of all this demand that, online learning and everything, all these behaviors that we've now adopted have created so much demand for digital infrastructure that, the existing customers that you have remained very stable. You've seen a lot of new demand. So initially people were hesitant to invest new money because of the fear that COVID might, really negatively impact the companies. I think as time has gone by, people have seen, no, these businesses are actually thriving in COVID and, might be like a safe haven, if anything, to invest in during the pandemic. And then once the pandemic's over, probably, their prospects even improve as many of these behaviors, will probably stick and companies will, invest in their systems and whatnot more freely once the pandemic's over and the economy improves. So activity level has been down. We think it's picking up and will, really accelerate over the next 12 months. But valuations have actually stayed very stable, if not risen.
One of the things that is always struck me about the private equity world, with you and Adam and the whole gamut is just the number of miles that you traveled on a yearly basis. I can only imagine how many, diamond cards, platinum cards. Nabil too. He was a guy who's traveling all over the place because apparently just hanging out in Kona all day is not where customers come.
Yeah, no. United Airlines, used to love me, and I said that one of the greatest memes during this whole pandemic is really my favorite is an email with the following meme. So getting an email from your airline that we're all in this together. When my bag was 52 pounds, I was.
Yeah, it's totally true. It's totally true.
Right?
So the question is, how much of that do we think is permanent? I mean, I know a lot of the M&A world and the folks in private equity. A lot of that interaction was always done in person. You wanted to touch and feel and see the asset and meet the people. And you just don't get the same, the 2D Zoom type of calls. Obviously, it's what we've had to do. But how much of that do you think has some level of permanence to it? And how do you think, travel is going to be prioritized or reprioritized?
No, I think, at least in what we do, the ability to travel and go out and meet people, as you're able to do that will pick back up very quickly because you cannot do justice to building relationships with people and really understanding, what makes a management team tick, a business tick without getting out there, meeting people in person, seeing their operation, just getting a sense of the vibe of the place. Right. And, as great as Zoom and some of these tools are, they don't fully replace, the ability to do that. Now, I think Zoom will continue to be very powerful, maybe sort of for the first, when you first learn of an opportunity, can we get on a Zoom and just kind of meet at least, somewhat informally over the computer and, learn a little bit before you hop on an airplane and go out to the West Coast to meet. But but the need to get out and meet people is palpable. And it's something that I always enjoyed so much about, my work was, the chance to meet guys like you and these really interesting entrepreneurs doing interesting things. And that's so important to making investments and whatnot. So yeah, it'll come back. I think people, like PTC, right? I can't tell you how many people I connected with over sort of a 3 or 4 day period that all said the same thing. Like, oh my God, we should be in Honolulu right now at PTC. Right. Like, wait to get back there next year. And I think you'll see, there's just immense pent up demand to like get back out and meet people. I mean, look, we're social beings, right? We fundamentally want to be with other people and socialize and engage in person. And I don't think COVID's changed that. I think we've learned how to work around it, but once we're able to do it again, I think it'll come back quickly.
Yeah, hopefully there's some sort of a normalcy over the next few months or year. One question that I've got for you is, I consider the era that we live in, the gold rush, to be the data rush. From your experience over the 20 years or so that you've been in the financial industry, have you seen a major shift of acquisitions, investments from the commodities like oil and gas to data? And if so, where do you think we're headed with it? What's next? Are we going to keep investing at the scale that we have in the last decade? Is it going to accelerate at a significant CAGR?
I think over the last 20 years or so that I've been involved, I think the realization that and again, I borrow phrases from people that I know and like, who I think are really smart and talented. So Mark Ganzi, right, who many of you probably know, CEO of Colony Capital, formerly Digital Bridge. He talks about, these are the railroads of the future. These fiber networks and data centers, these are the railroads of, the early 19th century. They're the things that are connecting, our economy together and making it all work. And I think we are, very early still, Nabil, in the game here. And I think people have realized how powerful these big macro trends are in the background, pushing on all this stuff, and that they're nowhere near over. So I think you're going to continue to see lots of investment because the demand is there and the returns are there to make those investments.
Commercial real estate in major cities, has always been like where, the Montgomery Burnses of society lived, these fat cats where their valuations continued to go up and they weren't as badly impacted by, the real estate bubble that burst that, was disproportionately impacted, banks and a lot of small time, mortgage holders for residential properties. Do you think something like a pandemic where, companies have finally enhanced their digital infrastructure to allow for effective, work from home situations, and as a consequence, will at the very least, reduce their dependence on a footprint in a lot of these major markets, football cities, New York City, Chicago, what have you. How do you think that ends up playing out, and do you think that has an impact on our world in any way?
I think, as we talked about before, behaviors that will stick, using these types of tools to be able to work remotely, that's going to stick to some degree. And listen, people that are much smarter and much more influential than, certainly the three of us, think of somebody like Jamie Dimon. He's been very open about the fact that he sees a significant downsizing in their office footprint in a place like New York City, because employees are going to work from either home, or people that are in New York are going to maybe want to move to, Austin, Texas, where they've got a big office because quality of life may be better there, what have you. But I do think, commercial office space in major cities will be under some pressure going forward, because I think businesses will just need less of it because people will be going to offices in these places less because they'll be working remote or migrating to lower cost, higher quality of life, better weather locations, Florida, Texas, what have you. So I do think there'll be a lasting impact over that. And again, to the extent that's true, it will just create more demand for that digital infrastructure that supports all that stuff.
Yeah, I think we have seen the largest exodus in the cities like San Francisco, New York, Chicago. I mean, everybody seems to be moving out.
Case in point.
Yeah, right.
Who would have ever thought it? Who would have
exactly.
ever thought it?
Yeah, but it's also a great opportunity for tenant improvements and building on the existing platforms whereby you don't have to reconstruct from scratch. Peter, what are some of the key takeaways and key lessons that you would like to share with our audience?
I think the telecommunications infrastructure ecosystem, continues to be an incredibly vibrant, career path for people to consider. And there's all different roles, whether it's finance or engineering, human resources, sales, marketing. The full gamut of sort of disciplines is available, and there are great opportunities in all of those within this sector. This sector continues to have growth. If you sort of think about great places to have worked over the years, find an industry with a tailwind where there's a lot of growth. And it's probably a fun industry to work in, and it will have lots of opportunity. And I think this sector continues to have all those dynamics. So I'd really encourage people to think about it as a career path, and get your foot in the door somewhere, and then keep your eyes open for different opportunities within the organization you're working in, of things that look interesting to do, and learn them, and keep your eyes open to new opportunities. I mean, that would be my main advice.
Peter, thank you very much for taking the time to join us at the Nomad Futurist podcast. Great having you.
My pleasure. It's been a real pleasure. Thank you, guys.
This has been great.
This has been great. Nothing lasts forever. Markets will come back, currencies will rebound, businesses will go on, and we'll all move on. That could happen next week, next month, or next year. I'm confident that those who prepare rather than panic will come out of this stronger. Thank you for joining us. This has been brought to you by Nomad Futurist. Check us online at nomadfuturist.com.